Hello and welcome. I'm John, and these are the three headlines driving the conversation in global markets today. From a landmark loan in India's renewables sector to Wall Street's next push into mutual funds, and finally, the tech tremors triggered by OpenAI. Let's get right into it. First up, Adani Green secures a $250 million offshore loan. The renewable power arm of the Adani Group has landed its first international borrowing since last year's short seller probe, tapping global lenders for $250 million. The money is expected to bankroll ongoing solar and wind projects across India. Why does it matter? The Adani conglomerate had been effectively shut out of foreign credit markets after allegations of accounting irregularities. This deal signals a partial restoration of confidence among international banks and could reopen capital channels for other Adani entities. With India targeting 500 gigawatts of renewable capacity by 2030, cheaper offshore funding is critical. Looking ahead, watch for the loan's pricing terms when they're disclosed. A modest spread would confirm that risk premiums on Adani debt are indeed compressing. Successful deployment of these funds could also accelerate commissioning timelines and bolster India's green energy ambitions. Let's move to our second story. Jefferies eyes India's fast-growing mutual fund market. The New York-based investment bank has hired Milind Barve, the former chief of HDFC Asset Management, as a strategic advisor. His mandate is to navigate regulation, secure a license, and shape product strategy as the firm prepares to launch retail funds in India. Here's why this is important. India's mutual fund industry has more than doubled assets under management over the past 5 years, crossing 11 trillion rupees, roughly $130 billion, with strong inflows from a burgeoning middle class. Global giants like Fidelity and Vanguard are circling, but barriers to entry remain high. By bringing in Barve, a respected industry veteran, Jefferies sends a message that it's playing the long game. In the months ahead, keep an eye on the Securities and Exchange Board of India for any movement on Jefferies' application. A green light could intensify competition, pressure management fees, and open new distribution alliances with fintech platforms hungry for differentiated products. And now to tech. OpenAI's internal feature rollout jolts software stocks. A simple blog post from OpenAI outlining experimental features it is using in-house sparked a fresh sell-off in enterprise software names, such as Atlassian and ServiceNow, already under pressure from AI disruption fears. Why the market reaction? Although OpenAI remains privately held and doesn't offer public market exposure, its innovations directly threaten revenue lines grounded in routine coding, ticketing, and documentation, areas large language models can automate. Investors recalibrated cash flow forecasts almost immediately, shaving billions off market caps. Looking forward, the next OpenAI Dev Day and any hint of a commercial licensing model could further reshape valuation frameworks for incumbent software providers. For portfolio managers, the key question is whether to rotate into AI enablers, chip makers, cloud infrastructure, or stay the course with application layer names betting on integration rather than displacement. To wrap up, Adani's successful loan signals tentative reopening of international credit for India's largest infrastructure group. Jefferies' planned mutual fund foray underscores how strategic capital is chasing India's retail savings, and OpenAI's product cadence continues to ripple through public tech markets, despite its private status. Investors should watch lending spreads on Adani paper, regulatory developments from SEBI, and the competitive responses from legacy software firms as AI progresses.